Let's talk a little bit about how you guys are gaining that exposure, and then we could talk more, I think, about just institutional investors in general. But starting with you guys, so you're investors in GBTC, then you invest in a number of other businesses, almost exclusively in the public markets, and those publicly traded companies, maybe something like a Square that has a number of different products or kind of revenue streams. One of them could be Bitcoin, right? So you almost get like indirect exposure to Bitcoin through a business that benefits from Bitcoin as a product or something that they offer. And then combine that with the GBTC, you're really kind of getting exposure in multiple ways. Is that correct?
That's exactly right. So there are definitely public companies that offer interesting derivative exposure to crypto. Square is actually one of our highest conviction names where, Square's primary business model has nothing really necessarily to do with Bitcoin or crypto. But when you actually dig deep into potential kind of revenue streams down the line, you start to realize how interesting the opportunities there are. So actually part of our research and part of our thesis is that you have these technology platforms that are kind of converging. And so the idea of having like a traditional tech analyst or traditional auto analyst or traditional energy analyst in this new world does not necessarily fit. And so when you kind of look at like a company like Square, there's so many kind of different ways where you can tackle the investment thesis. So obviously the one that a lot of us know is kind of at a high level, you have these retail banks that pay between $350 and $1,500 to acquire new customers. And you contrast that with a company like Square, which has one of the most popular digital wallets in the Cash App, which has a customer acquisition cost of around $20. And so this goes back actually to one of ARK's overarching theses, which is around this idea that cost declines are a primary force behind technologically enabled disruption. And so the same holds true in consumer banking. And so our fintech analyst, so I don't actually cover Square as a stock, but our fintech analyst, Max Friedrich, has done incredible work on how this kind of unlocks a massive market where you say that there are, let's say, 20 million people in the US who are still unbanked. To put this kind of into perspective, Citibank has 20 million customer accounts in the US today. And what's really interesting to see is when you see the comparison of the FDIC's unbanked rates and Google search trends for Square's Cash App, which kind of Max done a lot of work on, there's a very compelling kind of geographic overlap that makes it such that Cash App dominates the southern states where the rates of the unbanked are highest. You have kind of these features like direct deposit, which Square introduced in 2018. That lets Cash App users generate these kind of routing and account numbers that you'd kind of get in normal checking accounts. And then they can then pass that on to facilitate the deposit to their own employers. And you can basically spend paychecks from your Cash App balance with a debit card that Cash App issues. And so when you combine that with an extremely savvy network-based marketing strategy, with a clear product roadmap, you basically come to what could be a fully functional digital bank. They've built a robust user base targeting specific consumer networks. You have extremely sticky P2P payments. And so there's a growing realization that most banking functions can basically migrate to your iPhone. Notice how in none of that did Bitcoin ever really come up. And so then you layer on top of that, something like Bitcoin, where you look at Jack Dorsey as being the only CEO, I would say, of two public companies that truly understands Bitcoin's value proposition. And I've said it before, and I'll say it again. I think that we can't underestimate the role kind of Square and Jack are playing in kind of bringing Bitcoin to the masses. And there are a few interesting angles that Square has taken in its involvement in Bitcoin that I think is very unique. I mean, at one level, you have, let's say, the Cash App providing an easy interface to buy, sell, send Bitcoin, what's interesting is that the Cash App isn't like a Bitcoin first product. And so it's almost like by the way, there is another avenue by which you can learn about Bitcoin, and it's through the Cash App, and you already have the Cash App downloaded on your phone. And so there's this educational on-ramp and normalizing of Bitcoin that I think that Square is doing that many people don't yet realize. And then on the flip side of that, you have something like, a year ago where Square set up, let's say, Square Crypto. And that is basically a separate corporate entity whose really sole function is to sponsor Bitcoin developers and further the Bitcoin ecosystem. So kind of foregoing short-term profits for kind of to the benefit of Bitcoin. And so having a public company that has to appeal to shareholders that then acknowledges that, ultimately we're long-term investors and Bitcoin's success, Square's success is a really, really interesting kind of angle that I think that very few kind of public companies have the foresight to take. And so when you combine that with the fact that Square also has access to millions of merchants, they could end up hypothetically cutting out card networks entirely if you have both the customer and the merchant who are on board, and in doing so, that using potentially Bitcoin as a settlement layer. And so there are several layers to this, so that's kind of how we view Square more broadly. And I think that, it's a very, very interesting, unique way of getting kind of that derivative exposure to the Bitcoin opportunity.